Welcome to the deep dive. Today we're tackling binary options. That approach that often looks like a really straightforward way to potentially make some money in online trading.
Yeah, and it's that promise, isn't it? High returns, potentially very quickly. It definitely grabs people's attention, especially maybe if you're newer to the trading world.
Absolutely. That idea of quick profits from a simple up or down guess is, well, pretty tempting.
It really is. But today, our goal is to kind of uh, look past that initial shine. We want to really dig into what binary options actually are, understand how they work, and get a, let's say, clearer view of the risks and rewards.
And we're basing this on a pretty detailed article we've both looked at, aiming to cut through some of the hype.
Exactly. Provide a clear picture.
Okay, so let's jump right in. Fundamentally, what are binary options? The source calls them a basic yes or no deal.
That really is the heart of it. You're basically making a prediction. Will the price of something, an asset, be above or below a certain point at a specific time? That's it.
And only two things can happen, right?
Just two. You get it right, you receive a predetermined fixed payout. You get it wrong, you lose your initial investment. Poof, it's gone.
The article had that concrete example about gold. Investing $100, betting the price goes over $2,000 within an hour.
Right. And if it does, maybe you get, say, $80 profit plus your $100 back. So you walk away with $180.
But if it doesn't hit that mark,
Then your $100 is just gone, the
yeah,
whole amount. It really highlights that all or nothing aspect.
yeah, it's quite stark compared to, say, traditional stock investing where you might lose a bit or gain a bit over time. This is very immediate.
Precisely. Binary is the right word. No shades of gray, no partial wins. You're either in the money by a fixed amount or you lose the lot for that trade.
Okay, so if someone trying to make money this way, how does the article suggest they approach it? First point seems to be about understanding the market. Sounds, well, obvious, but maybe it's not.
Well, it's obvious, but crucial. The article really stresses that you need more than just a vague idea. You need a decent grasp of financial markets, forex, stocks, commodities, indices, whatever you're trading.
So not just guessing.
Definitely not.
Yeah.
It means, paying attention to news, looking at price charts, understanding how economic reports might move things. People talk about technical analysis, looking at patterns or fundamental analysis, looking at the bigger economic picture.
Right, okay. So it requires actual effort and learning.
For sure. Though maybe the usefulness of deep analysis is a bit debatable for those super short-term, like 60-second options. But the principle holds knowledge is better than a blind guess.
Got it. The next point the article makes feels really, really important. Choosing a reputable broker. It sounds like there are some dangers there.
Oh, there's a huge one. Yeah. Sadly, the online trading space, including binary options, has its share of, well, scams and shady operators.
So what should people look for?
The article strongly advises finding brokers regulated by recognized financial authorities. It mentions examples like CICC, that's in Cyprus, or ASIC in Australia. Regulation offers some level of protection.
Okay, so seeing that regulatory approval is a big green flag, or at least the absence of it is a red flag.
Definitely. And the article also says, do your homework, read reviews, check forums, really try to verify if a broker is legitimate before you even think about sending money. Basic due diligence, but essential here.
Makes sense. What's next on the list of how to potentially succeed? Something about a demo account.
Yes, the demo account. Think of it like using a flight simulator before flying a real plane.
Okay, a practice run.
Exactly. You trade with virtual money, not real cash. It lets you get comfortable with the broker's platform, figure out how to place trades, maybe test out a strategy, all without risking a single penny.
That sounds incredibly sensible, especially for newcomers.
It's a vital step, I'd say. Get your feet wet safely.
Okay, then the article talks about using proven strategies. Are there actual strategies for something that feels so binary?
Well, yes, there are established approaches people try. The article mentions a few. Trend following is one, basically betting that a price moving up will keep moving up, or down will keep going down in the short term.
Riding the wave, so to speak.
Kind of, yeah. Then there's news-based trading. A big economic announcement comes out, you trade based on how you expect the market to react.
Makes sense. Any others?
Support and resistance levels. These are price points where an asset has historically struggled to break below support or above resistance. So traders might bet that the price will bounce off these levels.
Interesting. And then there's one more, the martingale system. The article sounded quite cautious about that one.
Extremely cautious and rightly so. The martingale is very, very risky. The basic idea is you double your bet after every loss.
Hoping one win covers all the previous losses.
Exactly. In theory, like at a roulette table with infinite money, maybe it works. But in binary options, where the payout isn't even double your stake usually, and you have time limits, a losing streak can wipe you out incredibly fast.
So it can lead to huge, rapid losses.
Huge. It's a classic gambler's fallacy on steroids in this context. Definitely not recommended, especially for beginners.
Okay, message received on that one. The final point on making money was about money management. What's the core idea there?
It boils down to two main things, according to the source. First, the absolute golden rule. Never, ever invest money you can't afford to lose, like rent money is off the table.
Right, essential.
And second, it suggests a guideline, like risking only a small percentage of your total trading capital on any single trade, maybe 1% or 2% max.
Why is that so important?
It's about survival. It helps protect your capital from being wiped out by a few bad trades, and it also helps keep emotions in check. Big losses lead to panic decisions. Small, managed risks are easier to handle psychologically.
Okay, that makes a lot of sense. So those are the ways the article suggests try and make money. Now, what about the supposed pros? What draws people in, according to the source?
The article points out four main things that appeal to people. First off, simplicity, or at least apparent simplicity. Yes or no, win or lose. It seems easy to grasp.
Seems being the operative word, maybe.
Perhaps, yeah. Second, the potential for quick returns. We mentioned those 60-second trades. The idea you could profit in minutes is obviously attractive.
Fast money is always tempting. What else?
Third, the low entry barrier. The article notes you can often start with very little capital, maybe just $10. That makes it seem accessible to almost anyone.
Which could be a double-edged sword, I imagine. Makes it easy to start losing money, too.
Precisely. And the fourth pro mentioned is the fixed risk and reward. Before you even place the trade, you know exactly how much you stand to win and exactly how much you stand to lose.
So no surprises on the amount, just on the outcome.
Right. That certainty appeals to some trader psychology.
Okay, so simplicity, speed, low cost of entry, fixed outcomes. Those are the attractive points. Now for the flip side, the risks and challenges. The article didn't pull any punches here, did it?
Not at all. It's very direct. The first, and maybe the most important risk it highlights, is the high probability of losing money.
It actually says most traders lose.
Explicitly, it states the majority of people trying binary options end up losing their investment. That really tells you something. It's not easy money. The odds, especially for newcomers, seem stacked against you.
That's a very sobering point. What other dangers does it flag?
Well, we touched on it earlier, but the prevalence of unregulated brokers and just outright scams, that's a major issue. The article warns again about fake platforms promising guaranteed returns. Huge red flag.
Right, if it sounds too good to be true.
It probably is. Then there's the emotional trading aspect. Because it's so fast-paced, it's easy to get caught up in the moment, make impulsive bets based on fear or greed rather than sticking to a plan.
The speed itself becomes a risk factor.
Definitely. And finally, the article mentions that some binary options platforms might have limited tools for analysis compared to, say, more traditional stock or Forex brokers.
Meaning it's harder to do that market research we talked about earlier.
It can be, yeah. Fewer charting options, fewer technical indicators, that might hinder your ability to make properly informed decisions.
So putting it all together, the potential pros, these very significant cons, what's the article's bottom line? Are binary options considered worth it?
It presents a balanced view, I'd say. It suggests that, yes, making a profit is possible, but
There's a big but.
there's a big but. It's mainly possible for traders who are incredibly disciplined, who really put in the work to understand the markets, and who treat it like a serious business, not like hitting the casino.
And for everyone else.
Mm.
Especially beginners drawn in by the quick riches idea.
For them, the article is pretty clear. The risks massively outweigh the potential rewards. The likelihood of losing money is just too high if you lack the knowledge, discipline, and strategy.
So, summarizing the source's final thoughts. It's exciting, maybe, but definitely not a sure thing.
Not even close to a sure thing. The conclusion is basically, binary options can be an exciting way to engage with markets, but they aren't a magic money machine. Success requires education, strategy, self-control, same as any serious investment.
And the final advice.
Start very small if you decide to try it, commit to learning continuously, always trade with a clear plan, and keep that old adage in mind. If it sounds too good to be true, it probably is. Basically, invest wisely, or maybe consider not investing in this specific thing at all.
Okay, so recapping our deep dive based on this source. Binary options offer this veneer of simplicity, quick potential returns, low entry cost. Sounds good.
But underneath there are really significant dangers, a high chance of losing your capital, the very real threat of scams from unregulated brokers, and the psychological pitfalls of fast-paced emotional trading.
And the article suggests that achieving success, if it's even possible for most, requires a level of knowledge, discipline, and a serious, business-like approach that many newcomers probably don't start with.
Exactly. Which leads us to a final thought, really for you, the listener, to consider.
Go on.
Given everything we've discussed, especially that high risk of loss the source emphasizes so strongly, is that allure of potentially quick money really worth the considerable dangers? Particularly if you're just starting to explore financial markets.
Are there maybe, other places to start your investment journey that might be less treacherous?
That's the question. Are there alternative paths perhaps worth considering first? Maybe ones with a gentler learning curve and potentially more manageable risks. Something definitely worth thinking about before jumping into binary options.